Hi guys, welcome to this week's episode. Once again, my name is Pat, the manager at Derivative Trading Academy. Today we're going to continue discussing and learning about the structure of the market. And please remember that at Derivative Trading Academy, we offer free signals for derivative synthetic indices. And if you are interested, just subscribe to our Telegram channel via the link on the description. That's only for those who are watching this from YouTube. If it happens that you are watching this from TikTok, Instagram, or Twitter, you may as well inbox me for you to get the link to our Telegram channel. Okay. We also offer mentorship program for those who are passionate and willing to learn how to trade synthetic indices most profitable on their own. And if you are interested on the service, just email us at the email provided on the description as well. I know that most people prefer for free signals and not to learn it. That is also fine if you don't have time to learn it. But then if you are interested or if you want to learn more so that you can do it for yourself, then you know that's where the mentorship program comes in. So let us take a look at how our mentorship program looks like. So here it is. So what happens now is that if you preferred for free signals, you get signals from our swing or weekly trading strategy only. But then if you subscribe to our mentorship program, you get number one, which is swing trading strategy signals, and also you get the signals for daily trading strategy, while you be learning more about all these three strategies. So we're going to teach you how to use strategy number one, which is swing or weekly trading strategy. Then number two, daily trading strategy, and number three, boom and crash trading strategy, which is also known as scalping strategy because it takes only few hours. You cannot stay in the market for an hour or 30 minutes. No, very few minutes. You make your money and then you leave. Okay. So this is how it is. This is how it looks like. All right. Let us go back. All right. And so here we are. And please, if you would like to get notification whenever we upload a video, make sure you subscribe to the channel and click on that notification button. And may you please like this video and share to whoever you think would like to see this information. As you already know, that the aim is to help each other, which is why the Derivative Trading Academy is there. The reason it was formed is because I've seen that in this space, there are many scammers trying to scam people their money and run away with their money. I was once scammed by some other guy from, I won't say from where, but then, yeah, I was once scammed when I started in this industry, which is why I came up with this idea. Okay, so last week we spoke about support and resistance level, and we were about to learn how to draw them. Okay, so first of all, let me just describe, or let me define what support level is and what resistance level is. So the support level is where the sellers, let me go there. Okay, so the support level is where the sellers regularly loses their selling power and the buyers becomes in control of the market and pushes the price back up. So where is that point? I have a good example there. As you can see, forget about this part, only focus from this point to that point. Okay, this is actually your support level. Whenever the price reaches this point, it normally goes up in a ranging market or the sideways market. Okay, so looking at the structure of this, during this period, the market was actually ranging. It was going up and down. It was actually ranging. So what about the resistance level? The resistance level is where the buyers normally loses their buying power or their buying strength. and the sellers comes into control and pushes the price back down, which is this point here, as you can see. Okay, so whenever it goes up, whenever it reaches this point, it goes down. Whenever it reaches this point, it goes up, goes down, goes up, until that level is being broken. Just as you can see there, you can see that what is this? That resistance level have been broken long ago. They've been broken. And then if you are that kind of a guy who trades the breakouts, then you just place your position then, and then it goes up with you. Okay, until I don't know. Okay, until you see a reversal again, depending on your strategy. Okay, and guys, please always remember to use a bigger time frame, as smaller time frames are not reliable. As you can see here, this is actually my daily time frame. I normally use H4 D1 weekly time frame for me to get this trend line, this support and resistance level. You cannot use M15. No, you cannot use actually M5 or M1. You can if you understand your own strategy. If you have that strategy that requires that, but then I normally don't use that on my strategy. Okay. All right. And also what you need to consider is other factors of confirmation. So what happens there is that if it gets there, if it is there, it does not mean, or if it touches that point, it does not mean automatically it will go down. So you need other factors of confirmation, because you might think, okay, because it normally returns when it reaches that level. So let's say, for example, here, you think because it is now at the resistance level, now it should sell. Now you place your sell order there, only to find that it broke up, which is another problem that you don't want. Okay, so make sure that you have other factors of confirmation, such as candlestick patterns. Candlestick patterns, I taught you guys on our previous videos, so if you missed that, just go back and check. Okay, all right. So in trending markets, let's go to a trending market. Just want to make a quick example there. So right here, okay, what do we have? Okay, we have, forget about that other part. Okay, here we have it. So during this period here, what was happening there? The market was going up. It was actually uptrending. So in trending market, support and resistance are formed from swing points. What are those swing points? And how to draw them? How do you draw a swing point? Okay, this is how you draw it. Last week we spoke about the impulsive movement and the retracement movement. So what happens is that after an impulsive move, then it retraces. It forms a support level. So you can just draw your line there, put on your horizontal line there to indicate a new support level. Okay, so what happens is that when you put that line there, the market normally respects it. Okay, it shoots up, but then when it retraces, it normally respects that line, of which this is the same that happened there. So when it retraces, when it reaches that price, it reverses, it goes up again. So how to get in at the beginning of an impulsive move or impulsive movement? How to get in at the beginning of that impulsive movement? Okay, here is how you get in. You know that, okay, you drew your support level. When it touches there and you see this candlestick here, this is actually a bullish engulfing. So after seeing that at your support level, you get in, you buy. If you are afraid when it starts to play like this, you take your profit. And then again, you see there another candlestick pattern. You see, you get in again, shoot straight up, it comes back, you take your profit. Okay. Yeah. So these are your swing points. This is how you draw your swing points, which represents your support levels. Okay. What about this trend line there that I drew? How do you draw it? How do you draw it? So to draw a quality trend line, you will need to find at least two minimum swing points. Two minimum swing points. For example, let's say with this one, as you can see, 1, 2, 3. So as you can see that it was actually going up, and then it retests that line, and then it goes up like this, and then it broke down that trend line there, the uptrend line. Once it broke that one, then you see that, oh, you know what? Because the market or the sellers have overpowered the buyers. You just join this line, join it, and then when you draw that line, you can actually say that okay, let me just say, for example, you double click on it, and then you say option properties. Okay, let's see then. Let's see what happens. You go to parameters. You can just click on that ray right or ray left, so that it will continue wherever it will go. Okay. Or you can just pull it down to wherever you want it to be. Okay. So after drawing that, now you know this is your swing points now you know that this is your swing points. Okay. So you drew that line. This line now acts as your resistance in a downtrend. This one acts as your support level in an uptrend. Okay. So this is how you draw it. You do not try and force it. Maybe let's say because you see that it was supposed to be there. Now you have to push it. Now you have to force there for it to pass that point. You see this like this. No, you don't do it like that. You just need to make sure that your points are valid. Okay. All right. All right. So by drawing a support level in an uptrend, we can predict the next impulsive move. So by simply drawing this point there, you can predict your next move. Okay. All right. So the bullish market will tend to create a linear support level, and bearish market will form a linear resistance, which is these lines here. So today I'm not going to take too much of your time, because I know that many people are busy. So you just want to make sure that you just want to quickly check and then see what you can get and then get up. So I'm going to be quick like that. I don't want to take too much of your time. Also remember to not use a smaller time frame to draw a trend line. Okay, make sure that you use at least 4-hourly time frame and the daily time frame. Okay. All right, guys. So with that being said, our session have come to an end. Thank you guys for watching this. Have a blessed night, and see you again next week, same place, same time. I hope I did not waste any of your time. So next week we're gonna continue where we left off. I know there is still a lot to learn, but I'm just going to take it a bit by bit so that we are satisfied with the information that I'll be giving. Thank you guys. Bye-bye.